Welcome back to the Meta Mortgage Minute. Hi, I'm Jason Meta. It's great to be with everyone today. And today I want to reach out to all of our buyers that are out there in the different counties across California looking at purchasing the home of their dreams, and some of our agent partners. And really the purpose of this video is to talk to you a little bit about what we're finding on the lending side when it comes to homes appraising for the executed contract price. Obviously with inventory levels shrinking and a huge demand of buyers, that has pushed up our values in all of the counties across California. So what we're finding though is that with the huge demand, limited inventory, we're starting to see homes we have seen homes being overbid. So let's say, for example, a home is listed for $400,000. The executed offer price could be $450,000. Now, if you are in escrow for $450,000, the property has to appraise for that amount. Now, if the client is financing, let's say financing $400,000, and they're in escrow for $450,000, if that property does not appraise for $450,000, the buyer is responsible to bring up the difference, or there obviously be some type of counter proposal from the buyer's agent to the listing agent to renegotiate the sales price. So I really want everybody to understand that, because as we're seeing across the market, many of our buyers are having to come to the table with extra funds to close. So if you did expect to come to close at 20%, if the property doesn't appraise, in this case at $450,000, maybe it appraised at $420,000, that buyer is expected to bring 20% to the table plus the difference of the sales price and appraised value, which in this example will be $30,000. So if you're a buyer out in the market and you have a limited resource of funds for down payment and your closing costs, it's really important to understand that if you do get into contract and unfortunately that property doesn't appraise and you still want to execute at that particular purchase price, it's going to be your responsibility to make up the difference. Okay, that's a lot said, but I really want our buyers to understand that, because that's a really important concept. So if knowing all that, I would really encourage our agent partners, as you're working with your buyers, to first of all have an appraisal contingency. I know that doesn't give as much strength to an offer, but I really would encourage that to be in place on the offer. The second thing I would say is you want to make sure that you have your loan contingency to make sure you have at least that 17-day period to be able to execute on that. So those are a couple tips to help you as you're out in the market now. The encouraging news is there's more homes on the market right now. In January we had about 3,600 homes. Now as of May we have about 8,900 homes. It truly is a seller's market. We'll see more inventory hope to open up as we move into the summer months, but right now it is very much a high demand market. So I hope that information was helpful for you. Again, if you have any questions about this content or anything else we've shared in past videos, always give us a call. We'd love to help you. Okay, have a great day, and we'll talk to you soon.